Hello and welcome back to Coin Lady channel. The crypto markets have rebounded today, powered by Bitcoin's meteoric strength. Bitcoin's value has increased by nearly 20% since its low point a few days ago, on March 10th, when it was about $19,500. And I'll tell you, in terms of just pure chaos, unpredictability, and volatility, this has been one of the most significant periods for such in the 5 years plus that I've been in the world of crypto. And there have, of course, been some serious challenges in that respect. The collapse in March of 2020 can be associated with the pandemic. You know, you can talk about everything from Luna to Three Arrows to Capital to Voyager to Celsius to FTX, and so on, and it doesn't even have to be from this year. I'm sure I don't have to convince you guys that this is excellent, but it is. That's really high up there. Based on market reactions, uncertainty, and panic, it fits that description. Here are some recent developments in this area that I'd like to discuss with you. But I'll tell you this much about cryptocurrencies: they are looking great, and Bitcoin is clearly showing the way out of this crisis, just as you'd expect to see based on historical precedents. Generally speaking, they're all bullish indicators, and the value of all coins is rising as well. What I mean is that it's basically an ocean of green. Also, XRP is up by a small percentage, less than 1%. It was up roughly 3% earlier today. Bitcoin has risen by over 11% in the last 24 hours. Hence, everything you find here is top-notch. But before I go any farther, let me make one thing crystal obvious. I come from a completely monetary background-free background. Nothing I say or write should be taken as recommendations to purchase or sell any security. Just a hobbyist here that occasionally posts videos to YouTube on various crypto-related topics. Due to unexpected events, I decided to video a little supplementary video last night. The Federal Reserve's plan for dealing with the financial issue has been revealed. Clearly, there was a collapsed Silvergate. After then, there was Silicon Valley Bank. Then, late last night, word came down that Signature Bank had also failed. In addition, these three financial institutions showed a lot of support for cryptocurrencies. Some of these I will elaborate on in greater detail in forthcoming videos. For the time being, nevertheless, the most important fact to keep in mind is that Silicon Valley Bank depositors are fully protected, despite the fact that this bank was until late yesterday the primary source of investor anxiety. Which means we won't be bailing out any banks. Silvergate Bank and Silicon Valley Bank are signature banks. There will be no bailout for these institutions, but depositors will be reimbursed in full. The FDIC and the Fed will guarantee that. They made the announcement publicly yesterday night in an effort to contain any potential epidemic. That's the buzzword du jour when discussing the potential for widespread financial collapse, as many worry that customers of smaller and regional banks would move their money to larger institutions in an effort to keep it safer. But the federal government stepped in at the start of business today and made it publicly clear that depositors should not fear about bank runs in the smaller and regional banks. Yes, we will always have your back. This is what they have implied. There was no need for them to issue a blanket statement of reassurance to the nation's small and regional banks. They gave the depositors the assurance that their money would be safe. In a broad sense, that's what the markets were hoping to see. In other words, you haven't seen the stock market today tank. You've witnessed the downfall of financial stocks and the meteoric rise of cryptocurrencies. It's been a varied performance depending on the criteria you choose to evaluate it. Bitcoin is currently valued at $24,205. A typo occurred during recording. The correct value is $24,000. Bear in mind that only a few days ago, it was in the 19,000 range. As a result, the current price is $24,205. Bitcoin's share of the market keeps growing, and the asset class total market cap is approaching $1.10 trillion. Nevertheless, the last 30 days have seen essentially little change. It has increased by 42.94% today. I understand that, depending on the screen size of the device you're using, it may appear quite small to those of you who are interested in taking a peek. I'm focusing on the recent 24 hours tremendous run to the upside on the 30-day chart of Bitcoin's market dominance. Bitcoin is the primary beneficiary of the influx of capital into the cryptocurrency market. I don't mind this at all, even if XRP is my most valuable cryptocurrency holding. Well, I count on it. From looking at past examples, I have grown to assume it. Anytime the market enters bull territory, Bitcoin has always been the one to guide the way out of it throughout history, and cryptocurrencies have only been around for around 14 years. Steady US dollar coins. It's a rehash, really. Just about $1. Plus, a few days earlier it went as low as 87 cents, if memory serves. Circle backed us with billions of dollars in funding from Silicon Valley Bank. However, the bank has since collapsed due to customer withdrawals and withdrawals from other investors. When the Fed finally said, hey, we're going to absolutely make sure that depositors are made whole, U.S. savings and loan quickly rebounded. In the same vein, USC supports DAI. Well, we also had this Ripple-related headline from the Crypto Basics. Notwithstanding the risk posed by SVB, Brad asserts that Ripple is in a healthy financial position. I uploaded a video about it yesterday night in case you missed the news. As Brad Gollinghouse recently revealed, Ripple does have exposure to Silicon Valley Bank, but that institution is just one of many banking partners for the company. As a result, a string of tweets has begun. There are 3 related tweets, and I wrote about it yesterday. If you want me to read the remainder, I'll just start at the top. If you wish to pause the video to see it, you can do so at any time, as it is currently displayed on your screen. While the first one has the following format providing answers to lingering concerns about the Silicon Valley Bank. Silicon Valley Bank was a potential risk for Ripple. We kept some of our cash balance with them because they were a banking partner. The majority of our US dollars are stored with a wider network of bank partners, so we anticipate little impact to our day-to-day operations. Consequently, that's it, the end of the road. So there's some good news there too. Hence, it was to be expected that there would be chaos after the accident. All their money in a Silicon Valley bank? That could have been a bad idea. Worst yet, a catastrophe would ensue if the Fed didn't back it and people couldn't withdraw their money. Especially if they ended up losing the dispute with the SEC, Ripple's situation could worsen. The worst-case possibilities are no longer a concern. This is not the case. They obviously did what was prudent, and what one would expect from a business, which is to diversify its holdings financially. As cryptocurrency has been trending upwards, bank equities have been collapsing today. That's why this has been such a fascinating one. Before making this video, I did a thorough examination of the S&P 500 and the Dow Jones Industrial Average. And they are nearly flat, they're slightly downward in geometry, but otherwise close to level. Then you see crypto prices shooting up as bank equities are falling sharply. Bank stocks fall, reads a recent headline from the Daily Hodl. Price increases in Bitcoin and Ethereum anticipate a potential Fed rate rise. As investors try to come to terms with the failure of several huge banks, the cryptocurrency markets are soaring. Yahoo Finance's list of top losers at the start of a new trading week is dominated by financial services companies, several of which have had their share prices fall by as much as 75% in the first few hours of trade. And, as you can see, a list has appeared on the display. I won't be reading every single one of them to you. One thing to keep in mind is that I just looked at a subset of these to see if the market was even moving in the right direction. Just a little while before we recorded this video. Remember that they published this piece some time after the market opened, when things were already looking dire. It's not like things are looking great now, but they had improved slightly. As a result, I felt the need to make that point clear. The following is a quote from the article. Fears of a spreading financial contagion have rocked the sector with the recent closures of Silicon Valley Bank, Silvergate Bank, and Hallmark Bank, with investors wondering who would be next. The market is particularly hard on First Republic Bank and Western Alliance. An almost 60% decrease in turmoil. There is another thing to consider. As a result, I enjoy making this argument repeatedly because, honestly, it never gets old to me. Still, take a look at the headline. A hodl a day in just 1 week, whales and sharks have amassed $821 million in Bitcoin. Sentiment, a crypto analytics firm, reported last week that 2 major investor groups have been aggressively purchasing Bitcoin as the price of the king cryptocurrency fell below $20,000. Again, the price drops, the whales come in, and they buy a ton of goods. Which means the market wasn't tanking, and hopefully nobody blamed the whales for it. Naturally, that's not the case. Due to anxiety, there is. It was just your average panic among retail speculators. That's largely what was responsible for the effect. The Bitcoin price is set by humans, and humans are irrational and emotional beings. When people are feeling emotional, they tend to make poor choices that end up costing them a lot of money. This is something that whales have figured out how to exploit. And, well, the piece goes on. Bitcoin whales and sharks, or addresses with tens of thousands of Bitcoins, reportedly consumed 40,557 Bitcoin last week, worth an eye-popping $821.5 million. In light of the significant accumulation by the most influential Bitcoin holders, the company advises investors to look to more traditional markets for guidance on Bitcoin's future. Bitcoin, sharks, and whales aren't real, they said. Reason for crypto's bad week. There are 821.5 million Bitcoin stored at addresses with 10,000 Bitcoins at the time of this mid-crash estimate. This is the time to keep an eye on crypto's relationship with the stock market. Thus, there is little significance to the short-term, super short-term, or inverse relationship between the equity market and the currency market. These are risk-owned assets that, historically speaking, have exhibited the strongest correlation during downward price movements. There is no evidence to suggest that will disappear anytime soon. Equity markets are mostly flattening out except for the evident downward trend in banking stocks. Nonetheless, cryptocurrency has exploded in the short term here. But I did want to point out that the sentiment data used in this piece was current as of last Friday, March 10th. This was the culmination of a chain of terrifying events, and so on. And at that time whales began to take advantage of it. The trend has turned upward, and the whales are reaping the rewards. Funny how it always seems to work out, For this reason, I felt it necessary to reference this. It's like if I can read minds or something. It hurts to buy when everything around you is red, and you know you probably aren't at the bottom when you do buy, so the price probably isn't done falling even after you make your purchase. Well, I see. This is really creepy. Nevertheless, if you go back through time, you'll see that these are actually the finest periods to make a purchase. Alright, let's do this. Next, I'd like to, of course. Let's begin. I intended to write about it after all. Okay. Moreover, the local attractions, the analytics group claims that investors are now favoring Bitcoin over any other cryptocurrency. Sentiment suggests that the market's shift in tone after last week's decline may indicate a reversal is coming in the cryptocurrency market. To reiterate what I said at the beginning of the video, Bitcoin's market share has increased by 42.9% in the past 24 hours. This number is now at 42.94%. Indeed, I find this encouraging. Bitcoin has always been a leading indicator for when markets are about to emerge from bear territory. You're interested in witnessing this, right? After investing in Bitcoin, money typically moves into large, medium, and small cap stocks. It's time to start over. And here's what a trustworthy crypto chart expert shared with us, 337,800 fervent Twitter followers. Here's a graphic showing Bitcoin's market share for those curious. He's demonstrating the current state of Bitcoin's dominance and where he believes it will eventually rise to. The signs, he said, are all there. I've said it before and I'll say it again, when the market recovers from a downturn, Bitcoin will likely be at the forefront, ushering in a major impulse the likes of which we've seen only twice since 2017. This would propel Bitcoin's market share to levels not seen in over 2 years. As the Bitcoin cycle tops, money will start flowing from Bitcoin into altcoins, causing altcoin prices to surge and eventually surpass Bitcoin's all-time lows. That's what the community is anticipating, and as an XRP holder, I'm confident they'll deliver. Knows is maybe a bit too strong a word, but you get the idea. In other words, you have good taste in music. Future events will undoubtedly play out that way, I'm confident. The SEC versus Ripple case is just one example of the many potential catastrophes that could occur. Yes, it's frightening, and it is frightening, but even so, it's enough to make people jump out of their seats. Not that I can say I blame them. Whoa, that's the genuine deal right there. Thus far in 2022, what have we seen? The destruction of Terra Luna and the subsequent spread of a contagious disease as indicated by 3 arrows, capital Celsius, Voyager, and FTX are not science fiction. Also, I have more information for you here. But with the collapse of all these banks and individuals, did panic sell in the world of cryptocurrency as a result of what happened in the traditional banking industry? And all of these instances that I'm describing have not and will never stop crypto from becoming a significantly larger asset class. In the near run, you can panic out if that's your preferred method of operation. Yet, I don't think it's necessary in this case. The answer is definitely not. The SEC versus Ripple lawsuit is the most worrisome of these developments because it raises the prospect that XRP could be outright banned in the United States should the worst-case scenario come to pass. So, I just don't see it happening. To be honest, I don't see it happening. But even if this were to occur, it would only affect the United States. If the XRP price dropped dramatically over the world, people would stop using it for on-demand transactions, but eventually the market would adjust and XRP would be used for other purposes again. Liquidity. Thus, even in the worst-case situation for XRP in the US, there will still be little more than FUD fear, uncertainty, and doubt. This will have no effect on the rate of adoption. There is zero correlation between any of these factors and XRP or any other cryptocurrency's long-term prospects. Hence, there are many reasons to look forward to the future, and I know I certainly do. Count me in. I haven't noticed any effect on my ability to fall asleep during these terrifying periods. Allow me to preface this by saying that I am not a professional in the field of finance. Nothing I say or write should be used as a basis for making any financial decisions. In the end, please like and subscribe my channel. See you in the next video. Bye.